Hello there. The Chancellor has just dropped the 2025 budget. And if you're running a business here in the UK, you absolutely need to know what's inside. There are some really critical changes and, frankly, some opportunities hidden in all the details. So, over the next few minutes, we're going to break it all down for you. Now, this entire briefing has been put together for you by the experts at Pro Tax Accountant. They've poured through all the fine print to give you the clearest, most direct analysis of what the business tax landscape is going to look like for the year ahead. Okay, let's get into it. So here's the big question on every business owner's mind, right? Is this 2025 budget rolling out the red carpet for growth, or is it just going to wrap us all up in more red tape? Well, that's exactly what we're here to figure out. All right, here's our roadmap. We'll kick things off with the big picture business outlook. Then we'll dive into the taxes affecting your profits and your actual premises. After that, we'll look at the juicy stuff, incentives for growth, followed by changes for your team and exit plans. And finally, we'll cover what you need to know about compliance and your next moves. Okay, first up, the business outlook. Before we even get into the specific tax rates, it's so important to get a handle on the economic vibe and what the government is trying to achieve. Because, that context explains why they're making all these changes in the first place. So, to really get this budget, you've got to look at the economic backdrop. The UK's GDP growth forecast for 2025 has actually been upgraded to 1.5%. That's a sign of growing optimism, and it's this little spark of growth that the government is hoping to fan into a flame. And the entire 2025 budget is really built on these three pillars: securing stability, driving investment, and delivering reform. Keep these three things in your head, because you're going to see them reflected in pretty much every policy we talk about today. So, with that big picture in mind, let's get down to the nuts and bolts. This next section is all about the core tax changes that are going to hit your bottom line day in and day out. We're talking corporation tax and business rates. First off, some genuinely good news, especially for your financial planning. The main rate of corporation tax, it's staying put. The government's strategy here is pretty clear. They want to give you a stable, predictable environment so businesses like yours can actually plan for the future with some certainty. But, and it's a big but, there's a major change coming to business rates. A new, higher multiplier of 50.8 pence is being brought in for any property with a rateable value, that's basically what the open market rent is worth, of over £500,000. Now, this only affects about 1% of commercial properties, but if you're in that 1%, this is a number you absolutely have to pay attention to. And this brings us neatly to a pro tip. With these changes, it's honestly more important than ever to know your property's exact rateable value. Why? Because getting an expert to review your valuation might uncover errors or reasons for an appeal, which could lead to some serious savings. It's a simple check that could have a massive impact. Okay, we've covered the day-to-day operational taxes. Now, let's switch gears and talk about the stuff that could really help you expand. This next part is all about the government's incentives designed to help businesses like yours scale up and bring in investment. To make this real, let's think about someone like David, a small business owner up in Manchester. His biggest problem isn't his product or his team, it's finding the cash to invest in new equipment and just grow. It's a story we hear all the time, and the 2025 budget actually has some direct answers for him. And this table right here shows exactly how the budget is trying to solve David's problem. The government is boosting investment limits for the popular EIS and VCT schemes. But honestly, the real story here is the massive expansion of the Enterprise Management Incentive Scheme, or EMI. The asset limit is quadrupling to £120 million, and the employee limit is doubling to 500. For any company looking to scale up, this is a total game changer. So what does this actually mean for you? Well, it means you can offer much more valuable, tax-friendly share options to your team. This makes it so much easier to tempt that senior talent away from the big corporations. It helps you keep your best people for the long haul, and it gives you the room to grow your team in a big way without losing this incredible incentive. So we've talked about growth, but what about the people who make that growth happen? And what about your own long-term plans? That's what this section is all about. And stay with me here. The next point might actually surprise you, especially if you've been thinking about your future exit strategy. Just look at this chart. For years, selling your business to your employees through an employee ownership trust, or an EOT, was this amazingly tax-efficient way to exit. You got 100% relief from capital gains tax. Well, the 2025 budget has just sliced that relief in half. For business owners, this is one of the biggest changes in the entire budget. Let's be crystal clear on this. Under the old rule, selling to an EOT could mean a 0% tax bill on your life's work. Under the new rule, starting from 2026, half of that gain is now going to be taxable. So if an EOT was part of your big succession plan, you urgently need to sit down and rerun the numbers. There's also a little change coming for a popular employee benefit. From 2029, a new £2,000 cap will apply to the national insurance relief on pension contributions made through salary sacrifice, where an employee gives up some salary for a non-cash benefit. The government says this will mostly affect higher earners, protecting most basic rate taxpayers. It's a subtle shift, but an important one. Okay, we are on to our final section, compliance and crackdowns. It's not all incentives, you see. The 2025 budget is also sending a very clear signal that HMRC is getting much tougher on errors and evasion. Being prepared is no longer optional. I mean, this chart says it all, doesn't it? The penalties for filing your corporation tax return late are going to double from April 2026. This just shows there's a much higher price to pay now for what might seem like a simple admin mistake. It's a clear nudge from the government to get your paperwork in on time. And here is a pretty interesting detail on enforcement. The government is actually setting up a new, dedicated, hidden economy team. Their first job? To focus on cash-heavy businesses like hand car washes, barbers, and nail bars, to clamp down on tax evasion. This is a very targeted, very practical move to make sure everyone's paying their fair share. So let's pull all of this together. What are the key things you need to walk away with from this 2025 budget briefing? First, there's stability, with the corporation tax rate holding steady. Second, a heads up if you're on a larger property with higher business rates on the way. Third, a huge opportunity for growth, thanks to those beefed up investment schemes, especially EMI. Fourth, a critical alert for your exit plan. That EOT tax relief has been halved. And finally, a clear message on compliance. Penalties are going up and enforcement is getting tougher. Right, before we wrap up, a very quick and important note. This briefing is for general guidance. It is not a substitute for professional advice that's tailored to your unique situation. So before you make any big financial decisions based on the 2025 budget, it's absolutely essential that you speak to a qualified expert. Look, the 2025 budget has served up both challenges and some really significant opportunities. Navigating this new landscape really does require an expert guide. To make sure your business is ready to take full advantage of the reliefs and stays on the right side of all the new rules, please don't hesitate to reach out to the team at ProTax Accountant. You can get them directly on WhatsApp or by phone at 079-856-89912, or you can drop them an email at info@protaxaccountant.co.uk. Thanks so much for joining us.